Hello again, everyone. John Flynn here from Flynn Real Estate, serving Southern Ontario, based out of the Niagara region. Here once again to give you my honest and professional opinion regarding the 2022 Canadian housing market. So last week I had Anya on that works with me. The feedback was well received, actually. Most people enjoyed having her on. Some people just prefer me getting down to the basics and straight to the point, dealing with the stats as I do, which I understand. So, as per one of the recommendations from one of you viewers, I'm going to do a separate show with Anya and keep this one just as it is, the regular Tuesday release with the stats and the market updates and whatnot for the 2022 Canadian housing market. On the weekly video with Anya, most likely on a Friday, I'll release it. We're going to include just general real estate discussions, industry news, current events, questions and answers, and even we're probably going to start doing some live streams with that too on YouTube, so you get to ask your questions directly, real time, whatnot. I don't know when we're going to start the live streams. It might be a couple of weeks from now, but yeah, that's going to be a separate thing, so I appreciate the feedback on it. So before I forget, my background this week was obviously an old business card of mine. When I first started real estate, it was maybe actually a year after I started. I first worked for a Prudential franchise. It was the same company. And of course, we got rid of the Prudential franchise and we just turned to Sunshine Realty Corp. But I hated the business card when we switched because it looked so Mickey Mouse and unprofessional with the sun and it looked like a cartoon. But anyway, I thought I'd put it up there for some fun while I do this video. This week, I'm going to get into just shortly CPI and, of course, the upcoming interest rate hike, potential hike, and, of course, some statistics from some recommendations from viewers or requests from viewers in certain areas. So I'm going to touch on those shortly. So let's start with the CPI. We just got the news mid last week sometime that it's at 6.9%, still pretty high, higher than the Bank of Canada wants. And I did a little bit of research because it's 6.9% year over year. Yes, it's coming down, but remember that's compounded. So I wanted to see what was last year. So I dug up a Bank of Canada chart. Last year was 4.4% in September for the year over year. So if you compound that on, you're up like what, 11.3% from 2 years ago. And that's what happens, right? So next year it'll compound again. And just think of when we come to, say, maybe March of 2023, we're having reasonably high CPI with more reasonably high CPI. And this is what the Bank of Canada doesn't like. Looking at this chart, and I will give the Bank of Canada credit, they've done a pretty good job of keeping it at their target of 2%. You can see it's hovering around 2%. It's actually probably averaged a little bit lower than 2% by the looks of it for the last 10 years prior to 2021. So I thought that was pretty interesting, but yeah, we'll see how that continues. I don't think it's going to go down too quickly, but neither does the Bank of Canada, as per their next interest rate announcement this Wednesday. So let me know in the comments what you think it's going to be prior to then, and this will be released on Tuesday. So most of you will already see the rate before you watch the video, I'm guessing. But it looks like the Bank of Canada is going with 50 to 75 basis points. And here was a recent article from October 23rd from the Financial Post. Whistling past the graveyard, Bank of Canada expected to go big with October rate hike as recession risks loom. The central bank is expected to raise the policy rate by 50 or 75 basis points as part of the bank's strategy of front-loading rate hikes. So it will be interesting to see what will happen. Again, leave your comments and let me know your predictions. One bit of news I wanted to touch on this week that caught my attention was our finance minister, deputy prime minister, Chrystia Freeland. Not her biggest fan, let me just tell you right now. But anyway, Freeland warns of difficult days ahead as Canada's economy shows signs of weakness. Finance minister says rising interest rates will cool economy, drive up unemployment. Our economy will slow. There will be people whose mortgage rates will rise. Businesses will no longer be booming. Our unemployment rate will no longer be at its record low. That's going to be the case in Canada. No fluff with that message. Actually, one thing I wanted to point out is right now we're entering a period, or potentially entering a period this week, where our variable rates will start getting higher than our fixed rates. And I did some research. So the last time that our variable rates were higher than the fixed was back in 1990. So, and if you know your history, and if not, if you watched my videos, 1989, 1990 was like the beginning of a big downturn and high inflation. So it's kind of like history. Is it going to repeat itself? We'll see. But yeah, keep an eye on that. It looks like the variables will be higher than the baseline fixed rates in this coming week. We'll see what happens. Maybe the bond rates or the bond yields will tick up and force the fixed rates up. But as of right now, it looks like the variable is going higher than the fixed. There are still some difficult days ahead for Canada's economy. To say otherwise would be misleading. We all know the government would never mislead us. So actually, it's kind of weird that they're putting this information out there, because usually the government, especially these days, is trying to downplay things. But it's almost like they're at the point where they can't hide it anymore, and of course they have to declare what they have to declare. So yeah, be forewarned, as she said. Difficult days ahead. Yeah, so before I get into the statistics for the areas, I think I have Victoria, BC, Windsor, and Ottawa. Some places that I've got requests on. I know there was probably others. I just thought of the ones, or remember the ones I could remember. I didn't have the time to go back searching through comments. But anyway, I wanted to touch on my local market in Niagara Falls. I'm actually in Niagara Falls in the Niagara region. And yeah, in the last week, actually, first of all, I've noticed new precedents, right? On the way up, we would have precedents where you can't find a house in this neighborhood under this price, or, under 500 in a certain neighborhood, under 600, and of course, under 700. It kept going up. And now we're seeing that on the way down, where you couldn't find something under a certain price in this neighborhood, and now you can. And I'm seeing a lot of that. So I also wanted to look at what homes have sold for. So I just picked 7 days back. It was from Sunday, which is last night. So 2 days ago from when this video is released. And I went 7 days back just in my city for residential to see, okay, how many listings have sold and what are they selling for in relation to the list price, or how much under are they selling. So there were 16 sales in the past 7 days, and they were selling on average for 35,000 below the asking price, and they range from 100 to actually asking price. Saying that, there was one sale that was asking price, there was none that went over, and the rest were all below. But an average of those 16 sales, 35,000 below. Now I'm seeing people reduce, right? They reduce their prices, and like they should be doing, and the buyers are still coming in lower. The buyers are still saying this is too expensive. Out of the homes I've shown and been in with buyers and new buyers that I've met, I ask, okay, I think these houses are priced well, because I always tell my sellers, price them right, so you're not sitting on the market wasting time. And the buyers are still coming in now and saying, oh, it needs work, or this is still way too expensive. So of course the buyer sentiment and their outlook on the market's really changed, because they don't want to get into a house, right? Why would a buyer want to buy a house and it's worth 50,000 less in 6 months, or whatever the case may be? So they're hedging their bets on the way down, just like on the way up when they were paying 50,000 over. So pretty interesting dynamics there. And yeah, just I wanted to go like a real short time, that 7 days, to see what's really been happening in the short term. Anyway, let's get into some numbers here. I'm not going to do my city right now. I know someone asked for the Niagara region. I'll probably do that next week, or sometime in the near future. Let's look at Victoria. So these are September's numbers, and you'll see for all the three areas I look at today, they all have a common theme, that the sales are all down, right? So that's a given. Sales are down everywhere in Canada. Some areas more than others, and some prices are more than others. So Victoria, well below the 10-year average for September. This is the number of sales. The new listings in September was above the 10-year average, so they did have a good supply of new listings come on the market. All active listings in September are still below the 10-year average, so that was interesting to see. Lots of new listings, but they still don't have tons of inventory with total number of listings. Almost contradictory to this, and this is all from CREA, right? From the CREA stats, the months of inventory is approaching 5 months. It's like 4.5, 4.7 months right now of inventory. So we're seeing a good amount of inventory in Victoria, And yeah, the months of inventory is almost balanced. It's almost normal. It's above the 10-year average. So it seems like there's a good amount of inventory there. And when we get to the average price in Victoria, BC, it's up 11.8% from last year over year, September. It's about $100,000. It's down 1.1% month over month from August to September. And from the peak in April, it's down about 120,000 or 11%. So all in all, they've fared well compared to the rest of Canada. It's obviously a very desirable area. It seems like they're lagging a little bit behind. Their peak was in April, but yeah, it was interesting stats. Let's move on to Ottawa, our nation's capital. So the number of sales or the sales activity is below the 10-year average in September. Number of new listings was approximately average. It was right around the 10-year average. So that was interesting. The number of total active listings well below the 10-year average, but it's not the lowest ever, but it is well below the national average, or sorry, the 10-year average. And the months of inventory, the months of inventory is below the national average, and of course, it's below the 10-year average. It's about 3.1 or so. The national average 3.7 from what I remember checking last month or for last month's data. So yeah, Ottawa seems like they have a little bit of an inventory issue. But it is climbing up. And the average sale price is up 0.5% year over year. It's up 2% month over month, and it's down 15% from March. And it's about 115,000, and March was their peak. So their average price is, again, faring very well comparing to the national average. We'll see how that continues, but maybe they had a little to gain, little to lose. I know they didn't gain little, but a lot less than some of the Ontario suburbs and whatnot. So yeah, it's not bad. It's still 15% down from the peak, but overall it's they seem to be faring better than say Toronto or GTA and those suburbs. So and lastly, we have Windsor, Essex, and I've received actually more than one request for this area, and it is an outlier. Again, this is Korea Stats. I don't have information for this on my system. Sales activity, they are below the 10-year average, which is again is the common theme everywhere in Canada. The new listings, so they have lots of new listings well above the 10-year average for September. Total active listings just below the 10-year average, so not a huge supply issue in Windsor. And the months of inventory below the national average, but above the 10-year average, which is really interesting, actually. And yeah, so Windsor, they're getting killed on their average price or their prices. So they're down year over year 2.8%. They went up 2.3% month over month, but down almost 27%. So 26.7% from the peak in March. And that's 191,000, which is a lot given their price point, right? They had a lower price point than a lot of the suburbs around GTA. So yeah, Windsor, it's pretty far out there. So of course they're going to be more vulnerable to market fluctuations and obviously the downtrend in the market. People will, look closer to GTA to buy homes, and of course leave Windsor. There, it's just too far to drive for a lot of the investors and a lot of people looking to move. So yeah, thanks again for tuning in and watching. As I said at the beginning, I'm keeping the Tuesday video to this format, and we'll continue on just like this. I like it like this too, and we'll get Anya on for a Friday video and more of an informal discussion. I think she wants to ask me some questions. I like asking her questions, but she thinks she might not have the right answers. But anyway, we're gonna have a question and answer discussions, and if you have any questions you want answered, I think that's the video we'll answer them in. So again, put them in the comments, questions, comments, whatever you want. And of course, next week on the Tuesday video, I'm going to have some August month end statistics, not all of them because it'll be right at the end of the month. And we're going to know what happened with the interest rate announcement from the Bank of Canada and what they have to say. It's going to be, it's getting down to the crunch time. Everybody wants them to pivot, and especially in the States, but I don't think they can. I don't think they will at this point. So thanks again for watching, and I will see you next week.